Well, a tough day for the stock market. The Dow Jones Industrial Average had its worst day in nearly 2 years over worries about the U.S. economy, sparked a global market sell-off. That has a lot of locals concerned about their 401ks and investments. And Brad Zucker, a retirement financial consultant and president of SMA Wealth Management, joins us in studio right now to answer questions that we have been receiving from our viewers who are obviously very concerned about today. So we want to take our first question. Listen to this.
I think the interest rates have to come down, especially on home mortgages. I think prices have to come down, but how do you do that? How do you do it when they keep interest rates high and the labor market, people are unemployed, people are worried. So it's a very hard question to answer.
Yeah, what should we do right now? I mean, interest rates have been high for a while now, and they're not coming down yet.
They sure have, yes. Since 2021, you could have gotten a 30-year mortgage locked into 3.6. Now they're hovering just over 8%. Wow. And that is really making it out of reach for home ownership for middle-class America. So we do need to see these interest rate cuts, and what is going to lead to that actually started on Friday with a weak jobs report. We've had a hot jobs market and interest rates have gone up to cool down that jobs market. We're starting to see that now. We're waiting for the Federal Reserve to slice those interest rates.
And it's concerning, obviously, when your portfolio starts to demise and people are looking at their retirement, and people are literally, a lot of retirees, but also people are paycheck to paycheck right now. Everything is more expensive. But you look at this probably as take advantage if you have some extra money to buy with the market being low today.
Absolutely. So if you are at least 10 to 15 years away from retirement, you're looking at an opportunity to buy stocks at a discount price right now. But if you are already in your retirement and you're withdrawing funds to live on to replace your paycheck, market volatility can have a catastrophic effect on your future income. So it might be a good time to look under the hood of your retirement engine to see what parts you have under there and if they're going to go the distance.
All right, we have another question. Let's listen in.
I'd want to know really why the professional investors abandon ship at the first sign of trouble, but they advise retail customers like myself and my partner to hang in, because it seems like they may just be exploiting us.
Okay.
That's a great question. You know, when it comes to money and investing, we're all taught that you buy low and you sell high. So where are we today? We're the highest the stock market indexes have been in history. So it might be a time to take your chips off the table. But it all depends on your time horizon. If you're 35 years old and you plan to work for the next 30 years, you could afford market volatility and take risks. But if you're in the final 5 years of your working career or the first 5 years of retirement distribution, that retirement red zone, assets need to be protected to provide retirement income.
Back in the studio to answer some questions from our viewers who are really interested in what's happening today. So let's listen in to what our first question is here.
When's the market going to come back up? Probably what to invest in. I'd probably ask them what stocks I should invest in. Probably for the long yield. When the stock you think is what direction it's going to go into. A lot of the major companies are probably just having problems. Seems like they are maxing out. A lot of the popular stocks seem to be not progressing, but kind of like on a steady flow.
So he wants some financial advice also.
Okay, again, that all depends on your personal situation, but if you're a young worker, 25, 35, even 45 years old with the ability to collect paychecks for the next 20 years, you've got the opportunity where you can take risks to make back short-term losses. So you may want to look into these tech companies or a specific company that builds electronic vehicles and electronic batteries. They're used for long-term growth. On the other hand, if you're already retired and you need steady cash flow with growth opportunity, you want to look into a dividend producing stock, and that's found in oil stocks, energy stocks, utility stocks that have a consistent history of paying their shareholders predictable dividend income, which is a profit given to the shareholders with the ability to have long-term growth. So if you need income, you look at utility stocks. If you're looking for growth, start to look at those tech stocks.
Brad, that's good advice. Thank you so much for
My
joining us.
pleasure, of
All
course.
right. All right.